Hello and welcome, as it is the end of the 18th day of December 2018, and this video is going to focus on Fibonacci retracement within Bitcoin with a couple newer levels to look at, as I've talked a lot about the more longer term one of the high at 20,000 and the low at 150, which can be shown this low to this high. We're 23.6 down, was a little over 6,000, which was obviously support. And a little over 3,000 is the 38.2% mark. And as price action goes, well, it came down to this low of 3,129. That's the low. It's gotten above this high. Whether it will come back and make a lower one, well, I'll adjust the numbers I'll be talking about within this video. But as this stands, Fibonacci, that's important. I've got three different retracements. Of course, the big lows and the big highs, the 150 to the 20,000. That's already in play. But short term, we've had this rally from the lows that has managed to get above this level of resistance. So whatever this low happens to be, which will be 31.29, to whatever this high happens to be, and the tops and bottoms are known after the fact. I take high divided by low to get the differential of the move, and I put it to the exponent of the key Fibonacci numbers, 61.8%. And if you multiply that by 61.8%, you get 38.2. If you multiply that by 61.8, you get 21 or 23.6, so on and so forth along the way. So holding 61.8% from this high to this low is a very, very important thing. Right now, that number would be in at about 34. But I don't want to start calculating that until I see any signs of a reversal. But as far as it's concerned, we're starting to see possible signs. I mean, it's just getting above the 18 average on the daily, so it's attempting to revert the trend. Therefore, if it's going to attempt to do it, then maybe I should do some mathematics and see how these key levels come into place. Now, when you're doing levels like this, big highs and big lows, 20,000 high, and the low of 3,000, we're talking about a differential of about a 7x move that this decline has come into place. So as I was stating, 61.8% multiplied by that number brings 38.2, and you keep on multiplying it lower and lower. Well, a 5.57% Fibonacci retracement enters that of 3,470. And it didn't find any resistance, at least not within the single hour time frame. It did not. It did find support amongst that level. And that's something that happens not as often as resistance, but instead of having a fast move to the next level that you'd be expecting, if there's no resistance here, another alternate is actually supporting it rather than resisting it. Kind of, or not only kind of did that, it exactly did that. So that's a 5.57%. A little above 9% is the next key Fibonacci level, which barely comes in below 3,700, rounded to 3,699. And as it goes right now, that level isn't resisting much at all within the hour. It did a little bit for a couple of these periods on the 1900 and the 20 Eastern time frame timestamps. I did a little bit delay because of putting two words of time together back to back. 15-minute time frame. Oh, it found a decent amount of resistance amongst that point. And of course, it's breaking out above it. So are we going to have a nice little move to the next level? And what would that come in at? And what percent? Because we were looking at this at the 9% level after the 5.57. Well, let's just get it so I can draw a line to some of these next highs so I can fill in some of these. Because when you take a big long-term level like this, and you're looking at it short term at a potential for where a bottom might be coming into play, because when you're talking about retracing 5 and 10%, you're still just trying to break out of the downtrend in the early stages, of course. So they are short term levels, and as each level goes up, and you start getting the 23.6 and the 38.2s, they become more longer term and larger gaps from each size. And the next key level is a 14.6% correction, and that would come in at that of 4,102. Following that becomes a more key level that gets calculated within my spreadsheet calculator that I bring up, as these three are not. Again, 5.5%, 9, and about 14.5, and at around 23.5, or that of 23.6%, brings the next key level in at 48.48. And when we look at even further Fibonacci, another way of looking at it is from a breakdown level like this. So from the highs in which this broke down to the lows, what would be the Fibonacci levels? And they coincide with these numbers as well. And I've already calculated them. For the high was 62.93, and then using these same lows of 31.29, we got key numbers at 4,086, or almost 41, and a little over 48. And there's the 41 here and the 48, both coinciding within each other. So now, getting above the 23.6% level would take you to the next two much bigger, more key levels. For it needs to get above the 38.2% to attempt to really end the bear market and really move it to a neutral stage. Because if you've retraced anywhere less than 38.2% from a move, you're still within that move. Thus, in a down sense, it's still bear market territory. Between 38.2 and 61.8% is what I would deem that of neutral movement, and the attempt, of course, in making this a failed move. And then if it gets above 61.8%, that would be looking for a play to previous high, and thus an attempt of new high, making this move from point A high, point B low, a failed breakdown. So therefore, the 38.2% level from the lows barely above 3,000 and the highs at 20,000. Well, that's 6,355. Also, that key area in which it's supported. But furthermore, whenever you retrace 38.2% down, and then you're working your way back up, well, 38.2% on the way back up would be the 23.6% down move from here to here. So that is that key level. And I'm expecting from this bottom for it to make at least a 38.2% bounce. So this is my conservative target level for any type of rallies this might have. In at the 61.8% level, that comes in at 9,847. So even 10,000. And in any situation where you see market showing strength within this level and you see it going, that's when the thing would probably really start to take off. But as long as these lows happen to be in the low 3,100s or the 3,000 area, everything from this point down to here represents that this move is still in play or it's in bear market territory. Between mid 6,000s up to 10,000 would thus become neutral, and moving into bullish territory again is getting out above this key level. So I'd like to thank you for tuning in towards this video, and have yourself a great day. Bye-bye.